Chinese equities are now a larger part of the global investors' portfolio. From December 1st, MSCI, one of the top index providers in the world, will add Alibaba, Baidu, and a dozen other US-listed Chinese companies to its emerging market index and several other indices that cover China. Now, the most significant one is the emerging market index, and it was created by Stanley Capital International in 2001, and it's designed to capture and measure stock market performance in the world's emerging markets. Now, the index is made up of equities of companies from 21 countries, including Brazil, Russia, and China. So by owning the index, investors get exposure to a range of emerging market equities. And because of that, the MSCI Emerging Market Index is used globally in mutual funds, pension funds, exchange-traded funds, index funds, and makes up a part of most portfolios. Now, the MSCI indices allow investors to get in on the action of a collection of stocks in a less risky way, if you will. And over $9 trillion is allocated to the MSCI indices. So it's a big deal when the composition of the fund is changed. It means a lot of money is going to be moved around. Well, Karina Huber has been following this. Karina, it's a pretty big step. What does this mean for the China portion of the index?
Well, for the China portion of the MSCI index, it means that there will be 3.5% more of China in that index at the expense of other countries. Now, it's also estimated that anywhere between 70 and upwards of $90 billion will flow to the 14 companies included in MSCI indices. So it is a big deal for Chinese companies. The move will also change the sector allocation to the MSCI China index. Until now, the only Chinese companies included in the MSCI indices were those listed in Hong Kong, and they're very different types of companies than the ones that have just been added.
The MSCI has just said ni hao to 14 Chinese companies listed in the United States that include Alibaba, Baidu, and JD.com. Investment experts like Brendan Ahern say it's about time.
Well, I think the prominence of Alibaba's initial public offering, the largest IPO ever in the United States, was really very high profile. And investors would just ask, how is the largest Chinese company listed in the United States not part of the definition of China?
The new additions skew heavily towards tech and e-commerce, reflecting their growing power in the Chinese economy. Previously, most Chinese companies included in the MSCI were in the financial sector.
Being included in the index is good news for shareholders of the 14 Chinese companies. That's because exchange-traded funds and index funds that track the MSCI have to buy shares of those companies. That leads to an increase in trading volume, which tends to lead to an increase in price.
Shares already got a big boost after MSCI announced the decision on November 12th. But traders say there is room for them to grow.
You will see a gradual increase in the volume of those shares as all the ETFs really start to rebalance their portfolios over time. So if somebody were to get in right now, you probably will see a bump over the next 2 to 3 months in each of those names.
In June, MSCI said it would not include mainland-listed shares, or A shares, in its indices because it is so difficult for foreign investors to access them. But MSCI is currently speaking with Chinese regulators, and most market watchers believe they will ultimately be included.
And that will be a remarkable thing to see. You want to talk about a big trade occurring if they start including the A shares from both Shanghai and Shenzhen.
Now, just how big a trade are we talking about? Well, this current inclusion of 14 U.S.-listed Chinese companies is expected to result in anywhere from 70 to upwards of $90 billion in flows to those companies. If the A shares are included, experts say it would be talking about hundreds of billions of dollars. Michelle?
Yeah, it's a lot of money flowing into China. And speaking of the A shares, you know, it's fascinating that up to now, as you said in your report, there is zero representation of Chinese mainland stocks in any of these indices. No Chinese A shares, only the ones listed in Hong Kong. Right. There is a move to change this. When can we expect that to happen?
The reason why there aren't any A shares right now, according to MSCI, is because international investors are not given enough access to those companies. Also, they want more oversight in terms of accounting. But they are speaking to regulators. And what I'm hearing from investors is that after some delays, they believe that the Shenzhen Hong Kong Stock Exchange, Stock Connect rather, will launch in the first quarter of next year. And that would allow for greater international access. So that would appease basically MSCI, and they could begin the process process of allocation. Most expect that it would happen at the end of 2016, which would lead to a huge influx of money into the Chinese mainland.
Absolutely, very momentous. Right, thanks for following that. Karina Huber joining us in New York.